Welcome back, everybody. Joe Everest, the fence expert. Hey, one of the most common pieces of feedback we get about the Saturday morning live Ask the Expert segment is those things are long, and they're not wrong. They last about 3 hours, 2.5 to 3 hours. Sometimes, a few weeks ago, Caleb and I got into a pretty good discussion about marketing. I think it lasted closer to 4 hours. Nobody's got time to sit through 4 hours of listening to a couple experts talk. I get it. So Jeremy's created a new segment just for you guys called Hot Takes. It's usually a shorter segment of the longer conversation, basically hitting the hot topics, if you will, of that live segment. So without further ado, here comes this week's Hot Take.
Joe, what bugs you the most?
I'll give you mine, and I think it bugs everybody. When you see in these Facebook groups, what does everyone charge for X?
Oh, God.
And there's like 3 times a day. What's
What
everyone charge?
What does it cost you? What's it going to cost you?
I just quit.
Exactly. I know. That's what I mean. That's what, like, one, this is an illegal conversation. And you can argue with me all you want, but there are fence guys sitting in federal prison for collusion. So, or whatever the charge is for, collusion. Price fixing, whatever you want to call it. It's a Sherman Act. So, one, you can try to debate on whether it's legal or not legal. I would prefer just not to have that argument, because typically that argument happens in court, right? So let's just skip that altogether. And the thing is, Shawn, we've had this conversation before, and Caleb, we have too. We could be I could be in Evansville, Indiana, and I can have the same amount of people Shawn has, and I can use the same material Shawn has, and I can have the same size building Shawn has. And you know what? We'll have different pricing.
That's right.
Because our team members will operate at different efficiencies. Everyone's human. We haven't figured out a way to have robots build fences yet. And our trucks are going to run at different efficiencies. And Shawn and I have different ideas on what our business should look like.
Wants and desires. What do you want out of the business?
Well, also,
I think different.
I think the deeper thing is when guys ask that price, it is they've not come to terms with the fact that they really need to dig in and figure this out. Instead, you can sort of, well, if it's working for him, it'll work for me, and I can keep moving. And it's we've all been there, as owner operators, and it's like, well, the same thing you're talking about. We've always done it this way. It's always been by the foot or by this panel or whatever. We're just going to keep doing it.
And they think if they're just a little bit under that price, they can sell all day long. Why would they buy from you? They can buy cheaper from me.
Yep. They say, hey, he's a big guy and he's successful. Yeah. So I'm going to undercut him a little bit and I'm going to be great.
Well, it's like the power wash community. These power washing guys, you'll get them. They come into the Facebook groups and they just whine and moan about the $99 guy that does house washes for $99. And then you go interview the guy and he goes, I got 37 guys. We do $8 million a year in house washes. We run, we're efficient. We run about a 60% margin. And you go, the $99 guy's making more than the $500 guy.
Yeah. Well,
because he's figured his numbers out. He's figured out how to run that thing.
That's the thing is, if a guy just starting out, well, okay, this happens. So one of my guys decides that he's going to go make all the money he thinks that we make. Okay. Right. So he leaves, and that's fine. God bless you. Be good at it. So, but the thing is, he's like, all right, well, I know that they are at X dollars per foot for this particular type of fence. Mm-hmm. So let's say wood fence for this example. I'm going to be X minus $2 a foot so that I can be almost like him, but a little bit better, because I really can't. I can't say that I use better materials because I don't. I can't say that I've been in business longer because I haven't. So what is my competitive advantage? It will be less money.
Yeah.
Okay. Well, where are you going to buy your materials, bud? You can buy them from a retailer, right? Typically, wholesalers usually require you to have an established business. There's some requirements.
Buy in bulk. Yep.
Exactly.
Yeah.
Well, that's what they don't take. That's what in this example he doesn't take into account is that we buy wood by the multiple truckloads, right? So that we can whittle that number down.
That's right.
If I was going to go buy 100 pickets from Lowe's, Home Depot, Menards, that price per picket is going to be significantly higher than what I pay when we buy multiple truckloads.
Well, not just that, but they're going to pay a team member or themselves to go get it, fuel, wear and tear, maintenance, and time as well to get the same damn picket that we bought by a truckload that came right to us.
Yeah.
No effort at all. Made a phone call, sent an email. There it is. Right. So owner operators, smaller guys haven't figured that part out yet. All the behind the scenes money that you're going to spend, if they didn't write a check for it, they'll tell you, well, I don't have any other expenses. They add up.
They don't realize the responsibility. Once your business gets to a certain size, you may have a ton of money in the bank, but that money, you can't just go buy a new yacht with it. It's a responsibility to protect your people, and you got to have it there.
Yeah, it's used.
It's just sitting there, and it's this thing for emergencies, for materials, for payroll, whatever. You got to have it.
So let's talk about money for a second, because that's another one of my things, is knowing at a moment's notice how much clean profit your business has. And I don't mean, so clean profit is money that you can take out that won't affect anything, right? Mm-hmm. I think too many times people rely on a profit and loss statement, which the statement will only be as accurate as the person entering the information.
And it's time sensitive, right? So a P&L statement, no matter when you take that snapshot, you are thinking parameters of everything else because the business is still running, right? So there's things that are the dust's going to settle, right? So you have to imagine stopping your business and then recapturing what materials out on job sites, what's traveling, what's been staged, what's been done, what's been collected, opportunities. There's a lot moving pieces. So you're right. P&Ls are very difficult because there's a time sensitivity piece to it, and you have to make adjustments for that. Period.
So we use a system called Profit First. And Profit First, essentially, so you guys should go find this. It's an audio book. I'm not a big sit down and read. That bugs me because it feels inefficient. But I like audiobooks because while I'm traveling somewhere, I can also be listening. That feels efficient to me. So, but there's an audiobook, Profit First for Contractors. And essentially, and I'm going to boil this book down to a few sentences, and it's oversimplifying it. But you have an income account where just all the money goes. Right. And then from that income account, based on your business, you divvy that out based on percentages to operating expenses, payroll. Okay. So we got OPEX, payroll, owner's comp. We've got taxes and profit. So when this money hits that profit account based on the percentages, and understand, if all three of us did this, we would have three different percentages, right? So my percentage is my percentage, and it doesn't matter to anybody else what it is because it's based on my business. But once that money hits the profit account, it's done. It is clean profit, meaning there's nothing else that comes out of it. It is distilled profit. So, and whatever money I have in OPEX is that money to play with. By doing that, I can look up my phone right now and know how much money we have available for OPEX, which can be anything that operates a business, right? How much money I have for payroll, how much money I have pre-saved for taxes. So Mark Olson talked about this in this week's Successful Contractor. You should be paying taxes, right? The goal is not zero taxes.
Right.
Zero taxes is a problem for a lot of different reasons. But by saying we are going to allocate X percent of every dollar that comes into taxes, it just sits there, right? And the beautiful thing about the tax account is if we happen to buy some equipment and it reduces our tax burden, that extra money that's left in there, guess where that money goes?
Comes from it.
It goes to profit. After we pay the tax bill, that money goes to profit. So it also has an owner's expense or an owner's comp. So that's, as the owner of the business, that's how I get paid, right? So that's my payment for taking a risk on the business, essentially, making this thing go. It, tossing and turning at night, trying to think about where work's going to come from the next day, or whatever it is. So anyway, I would highly encourage you guys to read the book or listen to the audiobook, Profit First for Contractors. It changed how I run the finance for this company, and it's just beautiful. And it works in so many ways. So the income account, once you clear money, it's a clearing account. Money gets moved out every day. So it sits in there during the day, and at the end of the day, it gets moved out to these different accounts. So what happens, say, how many times does this happen to you guys? So someone will run their $12,000 bill on their American Express, and the job's done. It's signed off for. We got an email that says, hey, things look great. But then we get a charge back. And we say, wait a minute, chargeback? You said we did the job just right. I don't have any customer complaints. And they said, well, yeah, but here's the thing. It put me over the limit and I get in trouble for that. So I just charged it back and I'm going to bring you a check. Well, wait a minute. That's not going to work, right? Because now you're taking money from me. I've already paid the processing fee. You're going to take money from me anyway. And if a company worked out of one checking account, which a lot do, well, that money gets pulled out immediately. Right. So now you're out 12 grand and you have to hope that guy is bringing you a check because you probably have other things waiting on that money. In this scenario with the clearing account, now, sure, it does take the income account to negative, right? But that doesn't affect my business because that money is already allocated in OPEX, owner's comp, taxes, payroll, and all that money's already there. And then we can bicker with the bank about that negative balance on the clearing account because we can say, here is the great job email. Here is the signed checklist where he walked over it with the team and said the fence looks great. It's not my fault that he doesn't know his finances, right?
Yeah. So what's the process then? You just wait on him to bring the check, or the bank didn't give him the money?
Yeah. Well, no, the bank gives him the money. So typically it's well, you can have the account set up. And now, okay, let's say this. Every bank's probably different, right? So this is not like generic advice for everyone out there, but my understanding is you can set accounts up to not have bounce protection, right? So yeah, so if it doesn't have bounce protection, I think they're probably out of luck. You know, the bank
sounds pretty good to me. You know, I've never had that in this business, but when I was in the fence business, we did get some pretty sizable bills that people do a chargeback, and most of the time they have no good reason for it.
Well, that's it.
Yeah.
They hit their limit. They forgot about this other thing they put on the card. They exceeded their limit, and you get in pretty good trouble if you blow past your limit. Yep. And so they have another one, or they have something else they're wanting to pay for with the card, and they're out of credit limit, and so then they'll do the chargeback. Yeah, because they know you're a good guy. Yeah, Joe's a good guy. He'll be fine. I'll explain it. Well, Joe just paid 2.72%. For processing fee. Yeah, Joe's a good guy. But that also makes Joe mad because I don't get that money back.
We don't pay processing fee anymore at all. And I'll share this because most people don't know. We do not pay a penny for processing fee. We worked with the credit card company and said, we're no longer going to pay that. So you can make, it's not easy because the credit card companies don't want to promote and do this. But however, if someone swipes a credit card in our company, they have to accept the charge to the processing company of whatever percent that is. The homeowner has to accept that on the transaction. The money never hits our books. Never hits our books. So it skews your numbers because you're not making profit on that money. Okay. No. So it goes straight to the credit card processing company, 100% straight there. We get paid what we are supposed to be charging. So rather than saying, hey, cash discount, or we just add it into the cost. The problem with that is you're not adding your margin into that cost. If your margin's a 50% margin, you're not capturing 50% margin. And if you do $20,000 worth of processing fee, you're missing $10,000 in margin. You ran the numbers, so it's going to skew your overall numbers, probably revenue is. So if you go to a credit card company, you say, look, I want this credit card processing fee go straight to you. They're going to say, well, can you just, they're going to argue with you. Because what happens is, and the only way I learned this is I got to know the credit card company. What I learned was, they don't want to promote it because they have less credit card transactions, because more people will say, oh, you know what? I'll just write you a check when it comes out of their pocket, okay, when it's additional money to them. And that's what happens. So the credit card company says, we don't really like to promote it because we lose transactions. So for the last year and a half, we have not paid a penny in transactions at all.
Who's your processor? This conversation goes with your processor, is that correct?
Yep. So, and I know it doesn't work. It also works in Florida, because I have people, we're down in Florida, like, oh, it won't work down here. That's what everybody said. We had that conversation. It's working in Florida. It's working in other states, in Tennessee.
What company are you using?
I don't remember the company that we are currently using, the name of it right now, but I can get it to you.
I love it. I love that. Yeah.
We're not using the same company so I'm telling you, it doesn't. I don't think it matters.
Our processing fees are
outrageous, right?
So unbelievable.
So and you have a conversation with your credit card company, and if they say no, just go talk to another one.
See, right? This is the sort of things contractors need to get together on, and there needs to be some sort of all contractors need to have this talk because they're killing us. I mean, they are literally killing service industry with these fees.
So put it back on the consumer, and oftentimes the consumer's like, "Ah, yeah, right." I cannot tell you of one contract that I know of right now that I've lost in a year and a half.
Yeah.
Because that's everybody's scared. Well, if I don't do it, then Johnny down the street will do it, and I'll lose the work.
Well, how many people have a checkbook? Just about everybody. You got a checkbook. If you get a bank account, you got a checkbook.
I would, yeah, exactly. I would argue with that. It doesn't work. Listen, if you lose that job because of that processing fee, that wasn't your job.
You barely got it to begin with.
Yeah. You did.
I mean, you didn't own it. Yeah. They're going to find a way to pay you when they want your service.
Yeah.
So this is my price for the job, and I don't buy. The way we've always done it is you give a cash discount or you just add it into your price. I'm like, I get that, but you're not putting the margin on it. If you are, then you're overcharging them. You're further. Like, you know what I mean? Like you can be more competitive that way.
I think this is even better because you can tell all your customers, hey, we're not adding 3% onto your job because other people do that. So if they
did, and they mark it up, it's going to cost more than 3%. Let's be honest. Like if a customer or if a business really does put it in their costs, okay, then that 3% becomes what?
6%.
Exactly.
Yep.
You know what I'm saying? So you got to cut corners somewhere else to give the homeowner the same value because you're not going to take it out of your profit account, right? So you're going to find something else in that install. It's less money to justify it, and the homeowner loses there.
What's 3% on $5 million? I mean,
it's a lot. Okay, it got to a point where I'm looking at my P&L going, no.
Yeah, you're talking $150,000.
Exactly.
You've got to pay taxes on probably.
That's the other thing. It goes to you're going to pay on that income.
No, you wouldn't pay taxes on it because it would come out as an expense.
It's still going to increase your revenue and have a margin associated. It's going to skew your numbers for sure.
Right. Yep. Agreed.
For sure.
Agreed.
Yeah. Nobody likes those dang things.
That's right.
So a little golden nugget.
Hey, Joe, you said.
Thank you, Roger. I appreciate you. Caleb, Shawn, thank you for your time. I know everybody's time is valuable, and you guys are both so giving of it, and I appreciate that a lot.
Thanks.
Have a great weekend.
You too.
Same to you guys.
All right, guys, that concludes this week's Hot Take. Did you like it? Did you not like it? Do you like the format? Do you not like the format? Let me know in the comments below. We're still figuring this out, and we could use your help. But for now, I'm Joe Everest, the fence expert, reminding you that good fences make good neighbors. And I'll see you next time.